Here's a guide on how to qualify for and actually receive the Public Service Loan Forgiveness Program. The PSLF program is the largest loan forgiveness program of its kind out there for working in the public sector, working for 10 years at a qualifying not-for-profit or government job full-time, and then getting your loans discharged tax-free at the end of it. Now, there are all kinds of qualification problems for this program. That's kind of outside the scope of this video. The thing that you need to know is that you do not need to be worried about the future of this program for people who are currently enrolled in any kind of master's or professional school setting now. Okay, for the future, I think that people that are not yet enrolled in school need to track this program every year to see if it's still going to exist for when they take out loans. But for people who are currently enrolled in school or already have student loans outstanding, this program is a solid bet. Now, in terms of how to qualify for it, the very first step is to make sure that you have the right kind of loans. This is the #1 reason why people are not qualifying for public service loan forgiveness right now, is because they have loans that exist under the wrong kind of loan program. The most common situation is somebody's got loans from before 2010, before the government nationalized the student loan industry and took over the role of all lending. So if you have loans from before 2010, you might have these loans called FFEL loans. And these loans are basically bank-issued loans that are guaranteed by the government, so they're a different loan program, and payments made on these loans do not qualify to get your loans forgiven tax-free after paying based on your income for 10 years of payments. So that's the first step, is to make sure you have the right kind of loans. Now, if you do not have any credit towards the Public Service Loan Forgiveness Program yet because you've been in forbearance or deferment, or you've not made payments based on your income, or you've just graduated, then you should consolidate your student loans. Now, the way to do that is to log into studentloans.gov, and then you can process a transfer basically of all of your loans that are on there from your own loan servicers to the Fed loan servicing loan servicer that manages the PSLF program. So step 1 is to make sure you have the right kind of loans, and if you do not have any payment credit already, then to transfer that loan as a consolidation loan to Fed loan servicing. This is very straightforward. Again, log into studentloans.gov, click on Consolidate My Loans, and the whole process takes about 2 months to transition over to Fed loan servicing. You can even check that you're specifically doing the consolidation for the Public Service Loan Forgiveness Program. Now, the second step is to select the right payment program. Now, if you do not have the right income-driven payment program selected, your payments will not qualify. So for example, if you were paying back your loans under the graduated or the extended plan, that's not a qualifying program. You have to pay based off of your income, which means that you functionally need to select the revised pay-as-you-earn, or income-based repayment programs. Now, the vast majority of you need to be just selecting between the revised pay-as-you-earn and the pay-as-you-earn programs. If you have Parent Plus loans, know that you can still consolidate Parent Plus loans and make them eligible for PSLF, but you need to sign up for the Income Contingent Repayment Program, which is a specific program basically just for Parent Plus loans only. So when doing this consolidation, you also want to make sure that you leave out any Parent Plus loans if you have them, okay? Because that'll mess up your payment options. So once you've consolidated your loans, then you will have everything at Fed loan servicing. You have it on the right payment program because you're on pay-as-you-earn or revised pay-as-you-earn. Step 3 is to send in what's called the PSLF ECF, or the Employment Certification Form. This is a PDF you can easily find by Google searching this, and this PSLF ECF form needs to be submitted annually when you submit your income certification. So think about your student loans and the Public Service Loan Forgiveness Program like doing your taxes. Every year, one time a year, you submit certification proving your income, and you submit proof of your status in the program by submitting this PSLF ECF form. Okay, it stands for Employer Certification Form. You do that annually to build a paper trail so that when you apply for PSLF at the end of the 10-year period, then you have years and years of paper trail documents that show that you were actually in the program making progress. So that's the key, is to have this trail of employer certification forms that you've done annually, be in the right kind of income-based program, and then make sure that your loans are direct loans. Now, there's a caveat to that consolidation comment. If you already have existing direct loans, if all of your loans are direct, consolidating them restarts your payment count to 0. So if you were to consolidate your loans, your payment count would go to 0, and if you have any credit at all towards the PSLF program, note that you will lose that if you consolidate. So that's just a caveat on the consolidation aspect of this. Do not consolidate if you already have all direct loans that already qualify that you're already paying on. So the most important thing to realize about PSLF is also that the 10 years worth of payments are cumulative, not consecutive, which means that you can take a break off of this program and stop paying and then come back to it later, or you can continue payments while you're at a private sector job and then, on the pay-as-you-earn program, for example, and come back to the program and then pick up where you left off with PSLF credit. So that's a wonderful thing, and it's something that should really make you not worry too much about this program and pursuing it. It's really a good bet to take. Now, if you also have already made payments on your loans and your loans are at a different loan servicer like Navient, Nelnet, or Great Lakes, you also want to send in this employer certification form. That will cause your loans to transfer to Fed Loan Servicing, and that will cause your payment count to be calculated for the PSLF program. It'll probably be wrong. In most cases, for our clients that we do student loan consulting and planning for, their payment counts are wrong. So just note that you'll have to challenge that with a manual review with Fed Loan Servicing, or you can also contact your congressperson's constituent services office to lodge a complaint on your behalf. So that's the comprehensive guide to paying back your loans and qualifying for the Public Service Loan Forgiveness Program. All you have to do is certify every year based on your income, have the right kind of loans with Fed Loan Servicing, and then also don't forget to send in that employer certification form at least annually, and also as a best practice to submit it whenever you change jobs to make sure that new job also qualifies for Public Service Loan Forgiveness. And obviously we would love to help you. If you have any questions, just reach out to us. You could also check out our student loan planning service at studentloanplanner.com/help. Leave your questions in the comments below, and we will try to answer them and give you some information about how you could qualify for the Public Service Loan Forgiveness Program.